Hey guys, I hate to interrupt, but I just wanted to take a moment to say if you're studying for the CPA exams and you like the visual learning approach that we take in this video, definitely check out Universal CPA Review's free trial. You can do this by going to www.universalcpareview.com, or you can click on the link in the description of this video. From there, you could take a sneak peek at Universal's platform, which includes animated video lectures, study guides, and practice questions with task-based simulations that come with video explanations that walk you through the solution step by step, kind of like having a tutor by your side. Okay, enough of that. Let's get back to it.
Okay, so we remain focused on internal controls over financial reporting. And just to reiterate everything we've said up to this point, integrated audits require that the auditor is performing an engagement and opining on both the client's financial statements as well as the overall effectiveness of their internal controls. Okay, so when evaluating the client's internal controls, the auditor will often use what's referred to as the top-down approach. And when it comes to integrated audits, this is something that the exam has been known to test. So this approach is used when the auditor is evaluating the client's internal controls. And it involves starting at the highest level of the company's controls and working downwards to evaluate the controls at lower levels. So to help you understand this, think of a tree, right? The roots and trunk of the tree are like the entity level controls in a company. Okay, so they form the foundation of the company's internal control system. Just like a strong and healthy tree needs strong roots and a trunk, a company with strong entity level controls has a strong foundation for its internal control system. So moving up from the entity level controls, the branches of the tree are like the division or business unit level controls within that company. They support the entity level controls and help the company achieve its overall objectives. And finally, the leaves of the tree are like the transaction level controls. These controls are designed to detect and correct errors or irregularities at the individual transaction level. Okay, so we're going to dive more into this when we get into the details of testing internal controls later on in this course when we talk about obtaining audit evidence. But know at a high level that this is sort of the framework that the auditor is going to be using when evaluating the client's internal control systems. Okay, so the top-down approach allows the auditor to evaluate the company's internal control system in a structured way throughout the course of the audit, starting from the highest level controls and working downwards. This helps the auditor identify any weaknesses or control deficiencies and ensures the accuracy of the company's financial statements. Okay, so the exam likes to focus on entity level controls. Okay, so we're going to introduce framework number 3. And while we're going to introduce this at a high level, we're going to dig into this in more detail in another module. But the third framework is the COSO framework, right? We had the quality control framework, we had the code of professional conduct framework. Now we're talking about framework number 3, which has to do with management's internal controls. So some of the key elements of entity level controls consist of the following 5 items. We have the control environment, and this refers to the overall tone set by management towards internal controls. So a positive control environment encourages ethical behavior and effectiveness of risk management. Another big one is risk assessment. Okay, so they like to test risk assessment when it comes to integrated audits. The company must identify and analyze the risks to its operations and financial reporting to determine the nature and extent of the internal control necessary to address those risks. Information and communication. Okay, so the company needs to have effective information and communication systems that allow for timely and accurate communication of financial and non-financial information. We got monitoring activities. What's this? So the company needs to have an ongoing monitoring activity in place to ensure that internal control systems continue to operate effectively over time. And they need policies and procedures. Okay, so the company needs to establish appropriate policies and procedures to ensure that financial reporting is accurate, complete, and timely.